What's up, y'all? It's Mike in the building. I woke up this morning to one of my favorite text messages to get. Good friend of mine said, I was wondering if you had a budgeting spreadsheet you wouldn't mind sharing with me. Trying to get my life organized. I've only had that question asked a couple times, but I love when it happens because I love spreadsheets. Um, my friends know that about me. My friend Eric gave me this for Christmas last year. So uh, it's something that I've been meaning to do for a while anyway. So I figured I would do it today and send the spreadsheets along with a video, just kind of briefly going over the aspects of each spreadsheet. So I'm going to start with the expenses spreadsheet because it's much more straightforward than the other one that I use. That is more in line with the question that they asked. It's it's more budgeting this, but I think that they can kind of go together. So to start, I have everything broken down in 2 week periods because I get paid biweekly. This is one of my expense spreadsheets from the second quarter of 2021. So I break them down by quarter. So at the bottom, you can see all the previous quarters. Um, I have a savings and investments section up here that I kind of keep separated because you don't, it's not really an expense, you know, and um, you can change that amount that you decide to save if you need to, if bills get crazy or whatever. So at the bottom here, I have sums, and I believe that I do it without the savings section. So this is just like kind of a goofy thing I like to do for myself to see what the total expenses would be extrapolated for a year. So I just multiply this times 4 because it's a quarterly spreadsheet. And then using the 4% rule, I see what I would need to retire right now to be able to pay these expenses. I know I understand it's not realistic, but I just like to see a number here. Obviously, I'd want it way higher than that. So then I have uh, a debt section. It would be your if you have a mortgage, student loans, credit cards, car payments, things like that. I really tried to work on that in 2020, paying off my smaller debt. So luckily, right now I just have the mortgage to worry about. Then I have everyday expenses. The easiest place for people to overspend, in my opinion, would be food. I mean, if you just do this and you're a little bit better with buying groceries, you can really bring these numbers down. I was doing really well in 2020 with quarantining and all that, and not spending as much on food and just trying to cook more. Gotten worse since then with trying to keep food spending down, and then this is like beer and things like that. So yeah, those are two areas that I think everyone can always improve on. It's a hard balancing act with all of this because you don't want to obviously overspend because you'll never be able to make substantial progress financially, but you also don't want to you don't want to be miserable, right? I mean, you want to be able to be happy and spend money here and there on things that just bring you joy. I think that's equally important. But you have to balance it. The other thing is balancing trying to invest and make that um, progress, but then you have debt that you have to worry about too. So that's a balancing act too. I think most people you talk to would say you want to pay your debts down first before you really start diving into investing. I mean, there's a ton of opinions out there. Even my opinions on this stuff is changing all the time. I think there's nothing wrong with just paying down debt if you don't really know what you need to do. Like if you're not sure how to invest, just pay down debt. But yeah, that could be a whole nother video that I'm probably trying not to get into right now. Also, yeah, so gifts, haircut, things like that. Just like kind of like everyday things. Entertainment, if I'm traveling somewhere. Subscription fees is another big one where I think you could save a lot of money. I trimmed a lot of fat in 2020, and I believe I have YouTube Premium and Apple Music, and I think that's it. I think I cut everything else. Social would be like if you go out, get dinner or something. I books. This section is something that I always if I see a book I like, I don't feel guilty about spending money on books. That's one thing where like I really don't care how much money is here. If I'm buying these books and reading them and they're you know useful, they have useful information in them, which they usually do, then I don't care how much I spend here. I think that's a good place to spend your money. And then this is like distributing music and things like that. Doctor, pharmacy, just basic stuff there. These are things that just apply to me. Obviously, you can excuse me, add a row and then put oh shoot, credit cards or whatever, and you could take things out that don't apply. The only thing is if you add something there, I believe these are sums. Yeah, there's sums like this. So you would just have to, include whatever row you add. Make sure that you do that because otherwise your sums will be off and they'll be missing some expenses, and you don't want that because then you'll think you're doing really well with how you're spending your money and something's just been omitted the whole time. Your car insurance, like, if you get brakes done or something, and then gas. And then I have a house section for utilities, oil, renovations. If you're, like I did the living room during COVID, so that was like my couch, paint, and TV, phone bill, property taxes, and then your totals. So I know everybody's financial situation is different. Everyone's numbers are going to look different. Everyone's categories will look different. So feel free to just change this. I didn't actually make this from scratch. I found this somewhere online, and I would source them or cite them if I knew where I got this. But it's been at least like 3 years. So I'm not sure, but I've just kind of made it my own. It's a basic spreadsheet, but it's very useful. But yeah, so that is something I think everyone can use. So this is more kind of what he was asking me about, I think. And this can definitely be a lot more confusing looking because it's morphed over the years a lot. Like it's changed from this and slowly I just started changing things and making it more in line with what I need. So this was the last pay period or like 2 pay periods ago, something like that. So this is how I allot my money when I get my paycheck, and it shows me how much extra I have in my checking, which is almost always zero because I like to invest. So whenever I have extra money, it just, my savings rate right now is 35% of what I make, so I have like no money all the time. But it's it's here to show me what I have in my bank account and what that money is actually dedicated to. So I pay my mortgage once per month. It's a big chunk of money that's just sitting in my account. I don't want to have to remember, oh, like I need this amount for the mortgage and then I need enough for groceries or whatever. So I have this telling me that. I also have a second bank account, checking, where I'll put things that are going to be that I'm saving for a while. Kind of like the gift fund goes there. If I allot like $50 here from a paycheck for like Christmas or someone's birthday, I send that to the other checking account because otherwise it's just going to be $50 sitting in here and I'm just going to use that money. So in order to keep me from doing that, I send it to the second checking account, which I use through Chime. And Chime is great. If you're not familiar with them, they're a strictly online bank. You get their debit card. You can use any ATM. I believe there's no fee, and you can withdraw and deposit through stores. So they don't have brick and mortar banks. Like I've gone around the corner to the Rite Aid by my house to, I can't remember if I think I deposited money. I think I gave them like $100 cash, and they put it in my Chime account. It's really kind of bizarre, but it's cool because it just means there's places everywhere where you can, interact with your bank account. The other good thing is, I've had this argument with my grandmom about checks versus paying online, and she's a little more old school. She likes checks, and I'm like, why don't you just pay online? And she always complains about the processing fees. Or I guess what we're talking about here is like utilities. So I found that through Chime, you can actually have Chime send a check for you from your account. That eliminates the processing fee. And my argument against my grandma was, um, you still have to pay for checks and stamps. With this, you don't have to do that. It's really nice. And it just saves you the time of having to write out the check and get the envelope and all that crap. So I'll explain just what I do with this, and then this can be so much more simple, and it really did start out more simple than this, but I just kind of, I'm a little bit of a nerd, and like I like having breakdowns of things. I add more just so I can kind of extrapolate things. So I have the date of the paycheck. This is equal to the sum of everything that I'm setting aside. And if I don't set the entire paycheck, like if I don't devote all of it to like a number of things, I'll have leftovers, and usually I just call that supplies. I don't know why, but that's basically excess. And I usually have it kind of at the bottom. Sometimes I'll end up changing things. Like I think here this month I might have realized I needed an oil change, so when I had extra money, or I might have even like pulled some of it from this just to get my oil change when I needed it, and gas. So that might be why I added them after the fact. But these things change. The orders change. Every paycheck, some things are irrelevant, so I remove them. Like this, we were going to go on a trip. Not enough people, too many people bailed, so I'm not doing that now. So now this, is probably gone in the next paycheck. I also try to keep a running list of every possible thing that I've allotted money to before, just in case. Sometimes like I'll take out this, and if I forget to put it back in, then I totally forget to set money aside for that bill, which is like 190 or something every 6 months. So it's like kind of a weird bill to remember. And I've ran into that, and then that bill comes in, and it's like, oh man, like I didn't have 190 set up specifically for this, so it just kind of screws up your finances. I like to budget everything that way. So that works out to 1625 the paycheck, to total that 190. I think I end up doing it a little earlier than when the bill comes every time, so that just means I have a couple paychecks where I don't have to worry about setting that aside. So that's what this is. That is just the sum of everything that I'm setting aside, and including excess. So that should be the total. I think that should be the total in your bank account. And then this is, you put the total of your bank account here at that time, and then it's going to subtract it from what you have set aside. So that's kind of how you zero everything out so that you know you didn't miss anything. I don't know if that is really confusing or not, but that's just how I keep track of it. You don't even have to do it that way. That's just my way of checking that I didn't miss a payment somewhere. You can do it your own way. I mean, really, just doing this, I think having something set up where you just know, like you're kind of partitioning your checking account and just seeing where that you want that money to be saved for when the time comes to pay that bill. That's what. All right, let me just keep going down, I guess. So I have what my net pay is from that paycheck, and then when I get paid, I'll pull up the stub, and that's when I'll go here. Now this you do not have to do, but I'm just going to briefly talk about it because I think it's important. I think it's something that not enough people do. or think about. Maybe I'm wrong about that. I don't know. But one of the books I read laid it out pretty simply. It's just a 10% rule. It's called Pay Yourself First, which means you get paid. Anytime you have income coming in, you set aside 10% of that, and that's your money. You're going to invest it. You're going to put it in your savings account, whatever. It's not going to a bill. It's not going into anyone else's hands. You are keeping that money. And that's kind of supposed to be before you even pay your bills. And people sometimes freak out, like they're like, well, okay, what if after that I won't have enough to pay my bills? The idea is, and I know that it's realistic in some scenarios and not others. I understand that. But the idea is that's supposed to kind of force you to bring down your expenses to a reasonable place where you can afford to save that 10%. And again, I know that sometimes that's just out of the question. I mean, I'm a single guy. I don't have a family. I have different responsibilities than other people. I get that completely. I'm just trying to save the best way that I can for myself. And I think that's what everyone should do. Just do the best that you can, you know. So I've worked it up from 10 to 35, which is brutal. I feel like I barely ever have money to do anything. But so I take my gross pay, and then I take 35% of that. So technically I'm kind of trying to take 35% of, like, even before taxes are removed. So like I'm getting the money first is like kind of the concept of that. And it's like sort of how it's working. Then I have a bunch of deductions in my paycheck for retirement and savings and things like that. So I incorporate those things into this because that is money I'm keeping. It's just going directly into my Fidelity account that is set up through work. So that money's not being spent somewhere, you know. So that should be included in here. So that's pre and post. So those are the 401ks, and one's a Roth. I think that's I always get mixed up. I think it's this one. And then this is a stock purchase program through the company that I work for. So then I see, okay, I have this remaining from what I wanted to set aside, which is 35%. So now where does this go? Now this is what I have more control over. This isn't something that's coming out of my check and going directly into something. I put some in an HSA. It's just kind of like a tax advantage savings account. It's a health savings account. I do that through Fidelity. Kaplan is like I guess they're just like a learning portal, or you can almost kind of think of them as a school, I guess. But yeah, I was doing some certification through them, so I just a lot of money there. And you know that kind of sounds weird because you're spending money. It's a cost, but depending on how you look at it, one could say that you're investing in yourself doing that. So that would be an investment, and I feel like that's true. Crypto. I started a savings account with I don't know how to pronounce it. I think it's called Yotta or Yoda, YOTTA. It's a savings app, and they kind of have a lottery spin on savings where every $25 that you have in savings, you get one ticket weekly. So I get like 10 or so tickets, and you can if you match a certain amount, you win prizes. And it'll be like 15 cents. Then I think the next one will be like $7, then $15, and then you can get up into the thousands of dollars. So it kind of makes savings fun because like savings is kind of whack, and you don't really make a lot of money doing it that way. But I get why people do it. It's not great. I don't a lot of money. I don't a lot of money to. That's such a dumb sentence. To savings, but I try to just more for like an emergency fund. It's usually not a lot of money. This is more than I usually put in there, and then Robinhood for stocks. So then I just kind of see if that adds up to what I was trying to do, and if it doesn't, that week maybe I just couldn't afford to do the full 35. So this is kind of my expected rate, and then this is the actual rate that I do. So this paycheck I was able to do the full 35. Then I carry those numbers over into here. So here's my HSA. I would put that here. This is another thing. So I really liked accounting, like the early accounting classes that I took at Cumberland. So I do like this kind of debit credit thing here, and that's not necessary, but it's just how I like to do it, and it just helps me visualize, and it's easier to organize. That it's not necessary if that's not something that you're interested or in doing, or if it's confusing. But I would put the amount here, and then I would just kind of go down. All right, then there's Kaplan. Put that down here, that amount. Crypto, put 50 here. Savings here. And then, then I would just go down the list and say, all right, well, I need to make sure I need X amount of money for my mortgage by the end of the month. So I'll try and put at least like half of that because I'll have another paycheck before that date. So usually mortgage, I'll do like half, try and do a little bit more just because it's the biggest expense. Most people's biggest expense is their house, mortgage or rent or. Um, then credit card. So this is I don't have a I never have a running balance, but I do use a credit card. And I try to use it for groceries, gas, and then definitely I would recommend if you have big expenses that are coming up. For instance, I was doing the living room during the pandemic, so I knew that I was going to be spending a lot of money. I was going to be making big, like, one-time purchases. Like, I wanted to get a new TV because I was doing that, and the couch. So I signed up for a new credit card, and a lot of credit cards have a sign-up bonus. So I basically saved the money, ordered the couch, did it with my new credit card, got the sign-up bonus, and then paid off the balance right away. So I didn't have a running balance, and then a lot of sign-up bonuses are $150, $200. So it's basically just like a coupon. So that's how I use credit cards. That's how I would recommend you use them. Just never carry a balance. Every time you use it, just pay it off immediately. It's the best way to avoid getting into credit card debt. It's a slippery slope. I think about it all the time when I'm out. Say I want to get some fast food because I couldn't pack my lunch or something that day, and I'm just like, all right, well, I everything's a little tight. Let me just throw it on the credit card. I never do that because I used to do that, and it's bad. I'd rather take $10 out of what I have set aside for the mortgage that month just to grab some food because that gets ugly really fast. All right, then utilities, groceries, just kind of typical things you'd expect here. So I have a little key here. This is also something that I just do to help me organize it. It's not something that's necessary. But let's see. If I were to go down the list, if I had, most of these are zero because they had already been paid or they got transferred and, whatever happened that pay period. So that's why it looks kind of crazy. But the HSA, that would be something that I would just do immediately that day when I know how much I'm allotting to it. So I just wouldn't put anything here. Something like the mortgage where it's going to be sitting in my bank account for like about a month. That's what I would call kind of set aside. It's not a bill that has been paid. It's like its own little savings section of my checking account. So I put a little asterisk just to let me know that it's set aside. It has not been paid yet. Same thing for groceries. I allot like a couple $100 for groceries, and that's money that's just going to sit in my account. I hadn't paid anything with it yet, but when it comes time to order groceries, I'll have a little bit of money here to just pull from. I just know I'll have money for whatever I order. I order my groceries for delivery. I know I'm a lazy piece of junk. Yeah, so bills like car insurance, I think mine is pretty affordable, but I save half of it on during the pay period where I don't have to pay it, so that it's just less money to have to take out of my paycheck each time, and I do that for most of my bills. Um, Something like house home improvement, like this is if something goes wrong with the house and I need to replace it, or it, if that does not happen, this is kind of where I'm saving setting money aside for a possible down payment for another house. So any money that's there, I would put something like this, because that's not money that I'm going to keep in this account. I like to keep that separate. Same thing here. And if you look at the key, that just means I'm going to be transferring that out to my other checking account. I'm just not going to keep it here. So that's what those arrows I chose to do mean. If I'm, say I need cash because I want to, I don't know, like take my parents out to dinner or something, and like it's for their anniversary or something. So I'm going to withdraw that money. I'll just put a little exclamation mark. It's not really relevant because, like I said, that's just something that I like to do. This column would be, okay, I want to set $52.52 aside to put into my health savings account. When it leaves my bank account and is going into that Fidelity account, I'm going to come here because it's no longer in my bank account. I want it to just be 0 here because that's what this is actually tallying. So these columns are always the amount minus the credit side. So I'll just put 52 here to 0 this out. That might be straightforward. That might be confusing. If you don't want to do it this way, just delete this column and then just go in here and just do 52 minus 52.52 and 0 it out that way. It's the same concept. Even that, I don't know if you necessarily have to do it that way. I would, just because you want to be able to keep track of what you have left in your bank account, because otherwise you might overspend and then you're like, oh, I thought I saved money for groceries this month and now I don't have it. I guess at a point I thought I had more money than I did. So you definitely want to be careful and keep track of that. That being said, a lot of this can be simplified or even potentially removed. I hope that it wasn't too confusing. The other thing is you could mess with this, and if you don't like it, I'm sure you could find other spreadsheets online. This one I came up with myself. The other one I found and just kind of made it my own. It was someone else's creation. So yeah, I think that's it. So I'm going to include links to, I guess, a version of these. And these I also do quarterly too. So if you scroll up and down, you'll see the other pay periods. Where's that one at? There we go. Yeah, so I'll include these spreadsheets in the description of the video below. Please reach out if you have any questions, or if you have any advice on ways to maybe do this in a more efficient way. Let me know if anything was really confusing or unnecessary or anything like that. Also, let me know if you would like more finance-esque videos that just talk about personal finance, because I could talk for hours about that stuff. And I think our school systems kind of omit a lot of financial education. I think it's really harmful. So I think having a transparent, open conversation about these things is definitely important and really useful for building a comfortable future for ourselves, in retirement and that. So, all right. I hope everyone's well. Keep in touch and let me know what you think. Take care.